If I gave you $100,000 today, where would you buy your first or next investment property? Most people answer that question with Dallas, Fort Worth, Florida, Tennessee, Colorado, New York, California. And that's exactly why so many first time investors end up in the wrong market. They buy where they live, they buy where they want to live, they buy where their friends live, they buy where they go on vacation, they buy where social media and YouTube tells them where to invest. But the market that you choose, that you choose to buy in, can have a bigger impact than the actual property that you bought in that market. So in this video, I'm going to show you the biggest mistakes when choosing a market, the framework that I use to evaluate if I want to invest in that market, and why some of the most popular investment markets really aren't the best places to buy investment properties. In fact, one of the cities that I'm going to be looking at today looks great on paper, but I would not want to buy a rental investment property in that city. So a lot of times the top places to invest come off as affordable. Yay, that's good. We like affordable. Means that we can have an easy price point, that there's growing inventory, so it would suggest that it is a buyer's market. And the attractive numbers, it looks great on paper. Why wouldn't you buy in that market? But there's one factor that would make me think twice before I just jumped in to one of those types of top 5 markets. I talk about where I live, which is in the Dallas-Fort Worth area. I live in one of the suburbs here, and I always want to invest in my own backyard, which would be so convenient, so easy. However, that is just not possible. Even though the entry point in some areas of my mini market might be um, good for me to invest, we have very high property taxes here, so it's hard to get the cash flow that I need. So I have to look outside of this particular market. So I don't invest where I live. So I want to go back to the very beginning when I was talking about if you had 100,000, if you had 50,000, 10,000, it really isn't about the money that you have. It's about making the right decisions about the right property and the right market to buy that property in. No, most people immediately go to, okay, Dallas, Fort Worth, Florida, Tennessee. Those are all great places. Now, let me preface this by saying that just because it looks great on paper, and when we get into the pros and cons of buying in any particular market, one of the things that you need to look at is that in every market there is what we call a mini market. So there's subdivisions here where I live where they're much more affordable to get into. When we talk about Dallas, Fort Worth, I did a video about how Fort Worth actually, if you compare the two between Dallas and Fort Worth, you can get more bang for your buck in Fort Worth. And Texas as a whole is a great state to invest in. So where beginners actually start, they do a lot of YouTube videos. They're talking to people, talk. They go to networking groups. They talk to wholesalers. But none of that is data. So you have to always come back to where does it make financially, where does it make sense financially to buy in any particular market. But I think you're going to be surprised about something else I'm going to talk about that doesn't have anything to do with numbers. A city that looks perfect on paper because it looks affordable, looks like there's affordable houses that you can purchase. There's a lot of inventory, which would indicate it's a buyer's market. Or they have attractive numbers because maybe it's low property taxes, lower insurance. So, for example, right now in Galveston, Texas, you could find affordable houses there. Okay, you could find a lot of inventory in Galveston, Texas. And you could even make the numbers make somewhat sense there, but what would you look at that would be a little bit different there? So a lot of people during COVID bought homes in Galveston, Texas. Now there is a glut of those properties on the market. Because why? Because property insurance and the property taxes went so high there, and after COVID, people stopped traveling. So one of the reasons people bought in Galveston was because during COVID, we could go anywhere and work. So now Galveston is facing a huge amount of inventory. And one of the homes that I even saw, because I've always wanted to have a beach home there, was priced. They actually sliced the price, sliced the price 100 grand. But I still want to buy in that market because how am I going to make money there? How am I going to be? It's not really a long-term rental play for me. And as far as a short-term rental, it's just saturated. I don't think I could make enough money there to justify buying that property. Now, maybe you're saying, Nancy, I'm going to prove you wrong. And I would love to hear that in the comments. Prove me wrong about Galveston, Texas right now. It's still a beautiful place to go. Love to vacation there. I'm just not going to buy an investment property there. Now, what I do want to talk about is 7 things that actually matter. So those 7 things have to do with job growth. I want to know where people are moving to. Why are they coming here? That's really what I want to know. And then from that, is the population growing? Is there a demand for rental properties? Are people moving here? Is the inventory of houses kind of not where there's not properties on the market, but are they properties that people can purchase? And are they purchasing or do they need a rental? And I'm just saying, and then the rent stability, because maybe it's an area where there are a lot of homes for sale and there's not a lot of rental demand, or the rental demand is low. So that's one of the things that you have to look at too, is not just, the rents, but the stability of the rents. And, are there pockets of just, I tend to shy away from areas where there's a lot of rental properties. It just doesn't make sense for me to buy a property there because over time, that's going to become a competition thing. And I'm not going to probably be able to maximize my rents because I'm always going to have to be worried about the 3 or 4 properties that are sitting vacant down the street from me. Of course, I'm going to look at entry point. I'm going to look at property taxes. I'm going to look at property insurance. But one of the things that's very important, it's right up there, and it doesn't even have to do with the numbers. Is it a landlord-friendly state? Because if it's not a landlord-friendly state and I have to evict a non-paying tenant, guess what? I'm losing all kinds of money. And some states, New York comes to mind, New York comes to mind as one of the most, and California, of 2 of the most unfriendly landlord states. Now, both I love to go to vacation, but the laws there that have to do with ownership of property and evicting tenants are not too landlord friendly. Now, what do I mean? In California, for example, it takes thousands of dollars to evict a tenant and time. New York, it can take over a year to evict a non-paying rent. So you kind of have to look at, and you also have to look at the current. I'm not a politician person, but sometimes the politics of the state make it very difficult for you to evict a non-paying tenant. So you do kind of have to do a little research there. It doesn't really have to do anything with numbers as far as affordability and property taxes, but it is one of those aspects that I look at to see if it's a landlord-friendly state, because if I should have to evict a tenant, I want to be able to do that. So in Texas, if you're doing it correctly, you can evict a tenant within weeks, not months, weeks. Now, if you do it incorrectly, then yes, it could take a while. So you do have to know the process. But the fact that Texas is a very landlord-friendly state makes it a very investor-friendly place to buy rental properties. Now, recently, I did a short little video about some of the top places to buy investment properties. And so these cities actually got some very high marks on buying in these cities. And so we have Pittsburgh, and we have, Detroit and Buffalo and Cleveland and St. Louis and Birmingham. And yes, all of those would make, because of the numbers, they're affordable, they have low entry as far as getting them. But then the next question I would ask is, are they landlord friendly? So what these cities all have in common is low entry point. They're all very affordable places to buy properties, single family homes specifically. There's lots of inventory. So what that means is it's kind of a buyer's market. I mean, and again, it goes back to those mini markets. And typically I'm talking about the price point that's between 200 to 325, somewhere around there. Something for first time investors, but for me, my buy box is under 250. So these cities do have rental properties or single family homes that are under that price point. And you can pencil in the numbers. Okay, they work. You can make cash flow. There's appreciation. I would be challenged about Detroit, depending on where you were buying properties, because they are in a rebuild mode. And so some of the areas where you can like pick up some pretty cheap properties, you just want to make sure that, that is an appreciating area. But here's where the mistake is made. So I could say, you know what? Let's go to St. Louis. Let's go to Birmingham. Let's go to Pittsburgh. Let's buy some rental properties. And, I have tools and resources where I can look at the neighborhoods I want to purchase in and all of that. So my next question would be, okay, I can identify and find properties in those areas. So my next question is, are they landlord friendly? I have all kinds of resources that are free for you. And sometimes there's deals out there in any market that you might be missing. So we put together find the deals you are missing, and you can find the link below in this description of the video. Now, one of the things, I don't think we talk about this enough, is the cheap property trap. So I love buying cheap properties. I do. I like buying properties that are $50,000, $75,000. Why? It's easy to get private money for them. It's easy to make them cash flow. And there's so many things that you can do with a cheap property. I mean, you can long-term rent it, you can owner finance it, you can flip it. I just love cheap properties. They're easy to get into and you can make a lot of money from doing that. But where do you find them, right? So you have to know where to find them. And that's one of the resources that I like. I use a heat map so I can go in and find like what I call cheap houses, right? And I'm not talking about flat, well, sometimes they are trap houses, right? There's a guy that he does that. But I'm talking about cheap property traps that people fall into, because even though I love cheap property houses, to buy. The thing is that sometimes it's a trap, right? Because, for example, I went out and looked at a property yesterday in an area that I love to invest. It's very affordable for all those things. And it was dirt cheap, but you know what? And it didn't really need a ton of repairs. I mean, it was kind of a low end kind of flip. But the thing is I had to pass on the property because the house next door that was not for sale, and it looked like the people who lived there were going to be entrenched for quite some time, and they were hoarders, and their hoard extended outside of their property. So my property the property that I was looking at, it was very affordable. It's in a landlord-friendly state. All of those things, it was going to cash flow. However, the house next to it is going to be a detriment forever unless I could go in and buy that house. So for me, that is going to affect my property value. So I don't want to buy that kind of a house. So even though it's a cheap house, do you see how I'm thinking above and beyond just numbers? I'm like, okay, I have to look at the area that I'm also investing in, and long term, it's great. I could pick up a property, but am I really going to get appreciation? Probably not. Am I going to get a renter? Probably not, unless the type of person that I would attract to that property doesn't care about living next to a hoard, which the people that I want to rent to, I don't want them to be hoarders either. So kind of have to look at all the different aspects and not just go, oh, okay, I'm getting a good deal on this property. So I kind of want to just go over this with you. I did a video about the 3 numbers, and now I'm going to be talking about the 7 things. So the 3 numbers had to do with the 3 numbers that I look at for, is this a deal or not? But now the 7 things that I look at if I'm looking into a market is this. So number 1, job growth. Okay. I want to know, is the city moving? Is the market moving? Are people moving there or are they leaving? So then the second thing I'm going to be looking at is the population, because if I want to be a landlord, so this actually works 2 ways. If I want to be a landlord, I want to make sure I have a pool of people that I'm going to be able to rent to. All right. Or if I have another exit, as in short term rental, I want to know that I have enough people that will want to come to that area to rent. So I look at job growth, I look at population, I also look at rent stability. So both long term and short term. So long term, I want to make sure that number 1, I can get the rents I need. I don't really pay attention to the 1% rule, which is if I bought a property for 250, I would be getting rent for 250 or 2500. What I look at is the growth factor for rent stability, and can the market support long-term rental growth? Because if you have an area that, they're doing a lot of new builds, there's a lot of new construction, and it makes it easy for people to buy homes, then the demand for rentals goes down. So that's why I'm talking about that. And then I want to know about the landlord friendliness. As I've mentioned, if you have to evict somebody, it's pretty hard to do if you're in a state that doesn't allow evictions, or you have to hire an attorney, or it's going to cost you a lot of money and time to get that tenant out. Because why? That ends up costing you money down the road if you have to evict a non-paying tenant. So you're not getting any money, you still have a mortgage payment, plus the headache of just having to evict someone. And then, of course, I'm going to look at property taxes and insurance, because they go to your bottom line. So in Texas, unfortunately, we do have high property taxes, and depending on where you're at, we also have pretty high insurance, which a lot of places, unfortunately, that's what we're all facing, is just really high insurance. Now, I don't know why, but here's a tip for you on the insurance. So for whatever reason, every year I have to renew my insurance policies. And insurance agents, if you're out there and you're listening to this, please help me understand. So I was a longtime customer of Liberty Mutual, and I have filed very few claims. I think in 2016, this is 2026, we had a huge hailstorm and had a couple houses I needed a new roof on. But other than that, I have filed very, very few claims. Oh, I had another one about, a flood or something like that, right? The point is that I've been a longtime customer for probably, 15, 20 years. And so they raised my rates, when finally it just became too expensive. And so what I found is if I change every year, which is kind of a pain, every year I get some kind of discount, new customer or whatever. So it almost forces you to find new insurance every year instead of being rewarded as being a longtime paying client, paying customer. So insurance companies, hear me. Right. I know I'm speaking to all the investors out there. It's just really hard to maintain the relationship with insurance folks if they, every year you have to change because the rates go up. Okay, that's my rant for now. So, and then the entry point is going to be, really attractive to me. Like what is the price point? So remember, my buy box is a 3-bedroom, 2-bath, about 15 to 1800 square feet, no pool, love a corner lot. And I want it to be under $250,000 ARV. Okay. So that means I want to buy a property somewhere around 175 to 200. That's my buy box. And yes, it is doable. So in addition to all of those things, the other thing, it's really about the operating environment. What happens when you purchase that property and you get your tenant in there? What is the operating environment of the market that you just purchased in? That's what I'm kind of getting across. I hope I'm doing a good job about that. Leave me a comment if I am or if I'm not. But when I talk about the operating environment, what I'm really talking about is how long does an eviction take if I have to do that? Number 2, what tenant protections exist? And number 3, who do the laws favor? Do they favor landlords or they favor tenants? And that is one of the questions that you need to be asking yourself. So when you see this list of the 5 best cities to invest in, Yes, you have to do all your numbers, your due diligence, that kind of thing. Then when you say, okay, yes, this is a great area for me to invest in, the next question you want to ask yourself is this: what is the operating environment like for landlords? Not tenants, but for landlords. So the market matters. So when you're investing, when I'm investing, what I look at is, yes, the market matters, but so do the rules. The rules matter on how I can operate my single family home. So this is why, so after all these years of being a single family investor, I'm just now starting to look at other markets to invest in. And the reason for that is because of my network, I have been able to find, boots on the grounds in North Carolina, Carolina, Orlando. I do have somebody that I'm looking at different properties in Colorado, but I don't know. It's not as friendly a landlord state as I'd like it to be. So I guess it would be what type of property we find and what we were going to do with it there. But I love Texas, and you can invest almost anywhere in the state of Texas. I mentioned Galveston, and even though Galveston is just having some market not enhancements, but I guess disenhancements, it's over the years, it has been a great market to invest in. So, but what I like about Texas is it is affordable. You can find many markets within the Dallas and Fort Worth area and the surrounding areas. So I've mentioned before, I live in Frisco, Texas, and so it's very hard to invest in my own backyard. Just the price point is too high for what the type of investing that I'm doing. But there's so many secondary markets, meaning I go about 90 to 120 miles outside of the Dallas Fort Worth area to find properties. There's lots of business growth here, and a lot of the smaller cities right now, they are seeing tremendous job growth. So, with the advent of data centers and different businesses moving here to start up, there's a lot of opportunity in smaller markets here in the Dallas-Fort Worth area. So you can't just compare home prices alone. You have to look at, just all of the ball of wax, so to speak. So yes, you need to find affordable markets to buy properties in. Yes, they need to be landlord friendly. They need to make sense from a financial standpoint, but they also need to, what I'm saying is like a true outcome for an investor. Like, what is the net investor outcome of owning a property in any given market in 2026? So what I want to leave you with is this. You want to start asking the right questions. And the right questions, yes, have to do with due diligence, inspections. They have to do with running the numbers. They have to do with all of those things about the individual single family home that you're looking at. But they also have to do with the environment of where the property is located at, meaning the environment of operation. Landlord-friendly states are very landlord-friendly to landlord investors. So that's what I want to leave you with. So the question is not, is this a good rental property in a good area, and is it landlord? But will that market and the property that you're buying, will it help you with your whatever outcome that you would like to get with that property? So you have to ask yourself, what is the outcome that you want from this property? Do you want cash flow? Yes. Who doesn't like a little green in their pocket, right? Are you looking for appreciation? Yes, I am. I love buying the property today, and I want to see what it's going to be worth in 5 to 10 years. Because remember, purchasing a single family home is the long game. So one of the outcomes I want is appreciation. I want that property that I'm buying today, that it's going to appreciate over time, that it's a stable investment, that it's, I can get into it and over time, there's less risk with it. And I'm going to continue to make money, whether through my tax benefits, through appreciation, cash flow. I just want to know that it's going to be a stable, boring investment, if you will. And lastly, a low headache. If I do have to, evict a tenant, I don't want it to cost me a ton of money, and I don't want it to take time to get that tenant out. And one of the things when I'm talking to new investors is I see that they just get emotional. So, and I do too. So when I go on vacation, I say to them, I love looking at real estate when I go on vacation, no matter where I am. I love seeing different markets and things like that. And I always think, "Oh my goodness, wouldn't it be awesome to have a property here?" So I go back to my example of Galveston. I love Galveston, Texas. I think it's just a great place to go for families. There's so much to do. It's right there by the water. And I would love, love to own a property. I mean, it just sounds so emotional, right? Oh, let's go to the beach. Let's go to our beach house. But again, realistically, from a business standpoint, it just doesn't make sense for me to purchase a property in Galveston, Texas. Now, I also love Dallas, Texas, right? But I already live in one of the suburbs here. So for me, I would love to have like a townhome, down in the city center where I could just, park and then go and have a nice weekend. I would love to do that. So those kinds of feelings really they don't drive my business sense. So you can be emotional about real estate investing, but when it comes to actually putting your money down, you need to make sure that you're using business decisions, money, financial decisions, and come at it as a business mindset instead of an emotional mindset. So remember, the outcome, the goal is not the cheapest city. That's not the goal. The goal is what you want your outcome to be. That's really what defines where you want to invest in, right? So yes, you want to find affordability. Yes, you want to find a great rental market. But, what is your ultimate outcome? And that kind of goes back to, when you start investing, setting your strategy and getting clear on where, how, why you are investing in real estate. Now, what is the next step? Well, download our freebie down there. Talks about how to find hidden deals. You can book a call with me. Again, my link is there. If you just want to have a strategy call and talk about, hey, what are my options? Or you want to talk about a market that you're thinking about or want to think about, reach out. That's what we love to do. And, make sure you catch my next video on what cities are the best cities to invest in 2026.